So if the Asian funds, as you point out, it's the Asian funds, not necessarily global funds, have been trimming their exposure to the mainland Chinese market, I see in your report that they're sort of allocating that money elsewhere, such as to India and Taiwan. Why those two markets?
Yeah. No, let's take Taiwan maybe first. Taiwan is I used to live there for years in the early 2000s. There's lots of interesting companies, but one that simply dominates is the largest chip maker. And what we've seen with in Taiwan, that everybody's overweight on Taiwanese equities, holding the largest stock over there, TSMC. Most portfolios own about, say, 10% of that in their portfolios. Asian portfolios have about 10% in that particular stock. So they're really geared up, and that is, of course, the whole sort of AI story and how TSMC is exposed to that. So that is a market where most funds are quite overweight or quite well positioned. That came off a little bit, and then as China sort of faltered a little bit and stabilized, they moved a little bit of money back there. The other market where they're moving money into is India. So over the last, say, give or take 12 months or so, we've seen India peaking, coming off a lot. Foreigners were already selling 18 months ago or something like that, so that they've reduced their exposure. Locals have continued to buy that market, but yeah, in the process, the Indian market has readjusted. And since, I think it's somewhere maybe mid-April or something like that, we've actually seen, or March, we've actually seen foreign funds starting to come back into India, because it's an interesting sort of long-term story. And although there are worries about earnings, a lot of people say, hey, if I want to buy emerging markets, and we spoke earlier on how money is leaving the US and finding other opportunities elsewhere around the world. Emerging markets is one class. And within the emerging markets, India is one of these stories where, yeah, long-term growth seems to be just fine. People feel confident with that sort of story. The market has adjusted quite a lot already. Interest rates can come down. Inflation is a little bit of a less of an issue. So we see that money is moving into that direction as well. So Taiwan, India got a bit more attention.
You mentioned the AI story, the chip maker in Taiwan, but how does Taiwan compare to, for example, South Korea? I mean, they're very well exposed to the whole narrative, tech narrative, but some are actually pointing out the valuation is looking more attractive for South Korean side. Yeah.
Well, South Korea is always more cheaper than Taiwan. So it's about the relative gap that you're talking about, because over the last, well, at least since the mid-90s, since I started to look at some of these markets, Korea was always a relatively cheap market. But yeah, we felt at the beginning of the year that South Korea was in particular cheap, because what I just mentioned, everybody's looking at TSMC in Taiwan to build the AI sort of exposure. Everybody had therefore enough TSMC, but not enough sort of Korean exposure in their portfolios. Also, there's a couple of other positive things unfolding, like value up in Korea. So we felt that maybe Korea could actually do a bit better than Taiwan since the beginning of the year. Now, that's something that we still feel, actually. We still prefer Korea over Taiwan. But that probably is going to fade a little bit, because actually we've seen Korea perform okay, and Taiwan has come off a little bit. So the sort of normalization between these two countries is taking place a little bit.
I feel like nobody is talking about value up anymore, just because of the whole political situation there, which will hopefully be resolved by next week with the election there. But how bullish are you about the value up? I mean, people are still talking about the whole tax situation for chaebols, so they're not really interested in giving back to shareholders.
No, that's right. So Korea has looked at Japan, and in Japan they said, hey, this is a key market driver. The Japanese are paying more out. We should do this as well. That supports that, because it's one of the reasons why we have such low valuations in the Korean market. So this is now taking place. But I see, on one hand, you're going to be very skeptical and say, well, you know, this is going to take 15, 20 years before this normalizes, because they're paying so little dividends. Even if they increase that by 10 or 15% every year, it takes a long time before this becomes significant and before this actually impacts the profitability of these companies and their balance sheets. On the other hand, they haven't done this for a long time, and you're going to start somewhere. So
headed in the right direction.
Exactly, they're heading in the right directions. We see more share buybacks, we see more dividend payments coming through. The dismantling of these chaebols, these larger conglomerates, that is not easy. That's got, as you mentioned, there's all sorts of tax implications, strategic issues. So that will take a lot of time.